This past week, Bank of America released their latest quarter's earnings, and the market has really liked what they're seeing. If we jump over here, we can see Bank of America Q2 GAAP earnings per share of 83 cents was a beat by about 3 cents, and revenue came in at 25.4 billion, which was up around 1% year over year, but was also a beat by about 200 million. And on the day of their earnings report, I put this out on Twitter, and on that day, Bank of America was up over 50% in the last year alone. So pretty phenomenal returns over the past year. If we look at them now over the past year, they're up about 40%, and year to date, now up about 28.35%. And if we look at the past month, you can see right here, this is when they released their latest quarter's earnings. They traded as high as around $44.20 per share, and right now, trading at $43.20. So in this video, we're going to be taking a deep dive into Bank of America, looking at some of the key metrics. We're going to be jumping into the earnings presentation and, like always, seeing if we can calculate the intrinsic value to decide if it's a good stock to consider adding to our portfolio. Now, me personally, I actually do own Bank of America in my personal portfolio, and I'm up around 45% on the position as of right now. Now, before we jump deeper into the earnings presentation, let's get a general overview of some of the key metrics for this company. If we go ahead and jump over to my stock screener, we'll come up here and plug in BAC and hit enter. And we can see all this data is going to automatically load in. Now, we're looking at a bank stock, and the two main things that I want to look at specifically for a bank stock like Bank of America is earnings per share and shares outstanding. How have these metrics changed over the past decade? And we can see earnings per share have grown pretty drastically over the past decade, going from about 86 cents per share to in 2023 up to about $3.10. So pretty solid earnings per share growth. But we can see one of the ways that they're rewarding shareholders is by buying back a lot of shares. They bought back nearly 20% of their shares outstanding over the past decade. So we can see in 2013, shares outstanding was about 10.7 billion, and in 2023, it's now sitting closer to about 8 billion. So bought back close to 20% of their shares outstanding during this time. Now, here's what's interesting. If we jump over to the profitability spreadsheet and look at revenue versus cost of revenue, you may be a little bit confused. You see all this revenue, but cost of revenue is virtually zero. Now, why is this? Well, to understand this, you have to understand the underlying business foundations of a bank stock. How do they make money? And on a very high level, you have to understand what banks do. They take in deposits and they give out loans. So when they take in a customer's deposit, it allows them to give out more in loans, and they receive interest on those loan payments. So the reality of that business model is they really don't have any cost of revenue. Now, some people absolutely love that business model. And for example, Charlie Munger, he was a huge fan of banks. And if we look at Warren Buffett's portfolio, Berkshire Hathaway, we can see Bank of America is the second largest position in his entire portfolio, and it makes about 11.81% of his portfolio. So some people are big fans of bank stocks. Now, if we jump over to our dividend breakdown sheet, come up here, plug in BAC and hit enter, we can see all this data will automatically load in. Now, like always, quickly, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, we can see Bank of America, as of right now, starting dividend yield is sitting at about 2.22%. Well, if we jump back over to Seeking Alpha and look at the dividend yield history for this company, go ahead and scroll down, we can see just a little while ago, it looks like in October of 2023, the starting yield was sitting as high as 3.6%. So the huge run-up in share price has definitely driven down the starting yield quite a bit for this company, but it's still a decent yield to get in at. But here's why. The 10-year dividend CAGR is phenomenal, sitting at 23%, but it's slowed down quite a bit. 5-year dividend CAGR sitting at 7.78%. Now, why is this slowing down so much? Well, we have to understand, bank stocks, for the most part, cut their dividends during the financial crisis. If we zoom back even further, we can see before the financial crisis, they were actually paying out quite a bit more in dividends than they even are right now. But when the financial crisis hit, they basically cut that dividend nearly to zero, and since then, the dividend has been recovering, but they have been able to grow it at a high rate since they cut the dividend so much. So yes, the 10-year dividend CAGR is really good at 23.11%, but you should definitely not expect that over the next decade. The 5-year dividend CAGR will probably be pretty close to what it could be over the next decade if everything goes as planned. Now again, we're looking at a bank stock, so we don't pay quite as much attention to free cash flow. We want to pay more attention to the earnings. So we look at the earnings payout ratio, and for Bank of America, this is sitting at about 34.27%, and that appears to be a pretty healthy range. So from a dividend perspective, this is actually a pretty good bank stock in my opinion. Now, what we want to do now is dig into the earnings presentation. What insights can we gain from the recent quarter? And I've gone ahead and gone through this, and there's a few key things that I do want to point out. Here on the second slide, we can see the 2Q 2024 financial results. And just off first glance, revenue was down slightly compared to Q1 of 2024, but it did still beat earnings expectations. But if we come down to the bottom, we can actually see net income is a little bit higher than the prior quarter. Now, if we go ahead and jump over to the third slide, there's a lot to take in right here. There was a lot of organic growth with Bank of America. This is one of the largest banks in the United States and also in the world, but we can still see they added around 278,000 net new checking accounts and have now achieved 22 consecutive quarters of growth. That's a really good sign for the company because remember, in order for the company to give out more loans to create more net interest income, they have to take in more deposits. So this is really good organic growth. This is something we want to always look for. We can also see 13 consecutive quarters of small business loan growth. They added 6,100 net new relationships across Merrill and Private Bank. If we look at global banking, we can see they grew average deposits 6% from the second quarter of 2023. And if we look at global markets, they now have 9 consecutive quarters of year-over-year sales and trading revenue growth. Now, if we look at the fourth slide, we can see average deposits and rate paid trends. I've already touched on why deposits are so important. And if we look at total corporation, we can see it looks like total deposits are up from the prior quarter. And if you actually go back and look at around where they were 5 years ago, around 2019, they're up pretty significantly, close to around 35%. That was something I found when I was researching this earlier. If we look at the balance sheet, there's a couple of things that we can point out. First off, here's where we are for Q2 of 2024. Total assets sitting at about $3.2 billion. If we look at where they were around a year ago, it's sitting at about $3.12 billion. So the end result of this is they now have more total loans and leases this year compared to where they were last year. Again, this is how they can organically grow the business. We can see deposits are up over the past year as well, and we can also see book value per common share is up as well. Here on the 8th slide, we can see total loans and leases up by about 0.5% year over year. But then on the 9th slide, we can see what's maybe a slight concern for some investors. Net interest income. This was down in 2Q of 2024 compared to where they were last quarter and compared to where they were 1 year ago. Now, why is this? Well, they actually give us a reason over here. We can see higher deposit costs more than offset higher asset yields, higher net interest income related to global markets activity, and modest loan growth. We can also see this decrease $0.3 billion from Q1 of 2024, driven primarily by higher deposit costs, and we can also see they had a slightly lower net interest yield, which is basically telling us how much income they're receiving on these loans. Now, from a valuation perspective, we can see Bank of America has a forward-looking price to earnings of just 13.24. It's quite a bit lower than the average of the S&P 500. So some people could argue maybe that bank stocks are undervalued, but it's pretty typical we see lower price to earnings from these companies. There's better ways to value them. So let's go ahead and jump into my bank valuation spreadsheet. Again, you can download this on tickerdata.com, but if you come up here and type in BAC and hit enter, and all this data will automatically load in. Now, if we come down here, we can see something that I think is important if you're an investor. The beta is sitting at 1.36. Now, what does this mean? Well, basically, we're going to see more volatility from the stock than that of the market. So if you're someone who's not a huge fan of volatility, maybe stay away from Bank of America. But the first valuation that we're going to be looking at is going to be Graham's valuation, and we can see it right here. Let's go ahead and zoom in. Basically, this is a valuation model given to us by Benjamin Graham to calculate intrinsic value, and it focuses on the earnings per share of the company, the growth rate of the earnings, and also current market conditions by taking into account the current yield on AAA corporate bonds. So what we've done is we've looked at the estimated earnings per share average for the next year, applied a growth rate projection, and divided all this by Y, which is the current yield on AAA corporate bonds, and it gives us an intrinsic value of $34.12 per share, which is a decent bit lower than that current trading price of about $43. Now, the next one we'll look at is actually one of my favorites for a bank stock, and that's the historical price to tangible book value valuation. So price to tangible book value is a very important metric for bank stocks. This is what a lot of people don't seem to understand. But what we can do is we can look at how this valuation metric has changed for a certain bank over time. So we're looking at this historically speaking. So what we do is we look at the share price over the past decade for the company and the tangible book value for the company over the past decade as well. And what this does is it gives us the ratio historical price to tangible book value. And we can see this charted out here. So it looks like in 2014, this was sitting at about 0.92, and it got as high as it looks like around 1.55 in 2021 and 1.53 in 2018. Now, the current price to tangible book value is actually sitting at 1.56. We can see this is derived based off the current share price and the current tangible book value per share. So the average price to tangible book value for this company is sitting at 1.16, while the current price to tangible book value is sitting at 1.56. So what does this tell us? Compared to where their tangible book value per share is, the price is quite a bit higher than it has been historically speaking. Now the next one that I want to look at is going to be our multiples valuation, and for Bank of America, the comparables we'll look at are going to be JP Morgan and Wells Fargo. What we're doing is taking the stock price divided by earnings per share to find their price to earnings multiple. And you can see bank stocks typically just have lower price to earnings multiple. The average of these two is sitting at 12.56, but when we apply that same price to earnings multiple to Bank of America and their earnings per share, we come to an intrinsic value of about $39 per share. Now, it's important to also look at the ROA of these companies because sometimes maybe a higher multiple is justified with a higher ROA, but Bank of America's return on tangible assets in 2023 was a little bit lower than these comparable companies. Now, lastly, I want to look at the dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So we can see the dividend payments over the past few years and the average growth rate being of about 7.5%. So moving forward, if we project a dividend growth rate of 6% and a discount rate of 8.5%, we come to a dividend discount model price per share of $40.70. So when we jump over to our output tab, we can see the 4 different valuation models that we used. Now, the average of these gives us $37.91, but this doesn't take into account the current price to tangible book value, since that doesn't give us a price per share intrinsic value. But when we come down here, we can see the current price sitting at about $43.17. There's about a 14% difference in the current price and the intrinsic value that we came to. So with a 10% margin of safety, looks like our acceptable buy price for this company is sitting at about $34.12, and with a 20%, sitting closer to about $30 per share. Now, what you have to understand, it wasn't that long ago this company was trading at that price per share. If we look at the past year, we can see it got as low as around $25.50 per share. And this was a time right here when I was actually adding shares to my portfolio. If I remember correctly, I started adding when it was around $29 or $28 per share. So it went a little bit lower, which had a lot of people concerned, but I continued to accumulate shares. And if we jump over to my do-it-yourself investor toolkit, blow up my growth chart, we can see Bank of America has really paid off. It looks like I'm actually up about 61.7%, even higher than I originally anticipated. And this is one of the reasons it's so important to continue to perform valuations on these companies, even when you feel like they're currently overvalued or the market is at all-time highs. It helps you understand when there's opportunities and when good entry points appear. So as for me right now, I definitely don't have any interest in adding shares of Bank of America. The company's performed really well over the past year, but it appears they may be slightly overvalued, but I am happy to continue to reinvest my dividends right back into the company. The earnings report wasn't perfect, but overall it still looks like things are going pretty well for this company. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.